You're watching Capital Cosm. My name is Danny, and today's guest is the CEO of Glint, Jason Cozens. Jason, thank you so much for coming on, my friend.
It's great, Danny. Thanks for inviting me on. It's my pleasure.
Yeah, my pleasure as well. So let's just dive right in here, Jason. For people who may not know who you are and what Glint is, go ahead and give us a little bit of a background on your origin story. What got you into gold and silver and into
Yeah, sure.
the markets and things like that?
Yeah, well, listen, for somebody who is disrupting financial services, I didn't come from a financial background. I was actually qualified as an architect, not of software, but of buildings. And I pivoted, got involved in virtual reality and then e-commerce, and set up my e-commerce agencies. And my company was, servicing a lot of the high street retailers with their e-com. And then 2008 happened. I mean, boom, the global financial crisis. And wow, that was a shock. And it was really the first time that I realized that your money, your deposit in the bank is not a risk-free store of value. By design, your money in the bank is lent out, it is put at risk. And I thought to myself, there's got to be a way in which we can store our hard-earned money without putting it at risk. I mean, I think the banks deliver a valuable service in the economy, but what if I want to have no risk? How do I do that? And I also started thinking about the purchasing power of my money. Why is it that my money depreciates in ways that are completely outside of my control? Why is it that money is becoming worthless? I think nearly 90% of the value of the US dollar and other currencies like the pound lost in my lifetime, and it's not over yet. So why on earth are we using a fiat currency that does that? And I didn't understand that. And I looked into it and realized that, gold had been money for thousands of years. Gold had backed the US dollar until as recently as 1971, a year after I was born. And temporarily, Nixon came off the gold standard. These are all things that I'm sure many of your viewers already know. But I'm just telling you, this was my journey, maybe similar to some of yours. And I just thought, well, hang on. So if gold, immutable, its nature can't be changed, unlike everything else that we use in our monetary system, created when two neutron stars collide. So it's never gonna change. And I thought, well, why don't we just enable gold as money? I mean, it's valued globally. It's valued throughout time, history, space. Different parts of the world, everybody values gold. Central banks hold it. In fact, it's become now the second highest reserve currency of all central banks. The highest after the US dollar, replacing, taking over from the euro, which has now moved into third space. I thought, why don't we just enable gold as money? And we can't rely on central banks to do that. We can't rely even on the people we elect to try and change that, because the problem's just got too big, the fiat currency problem. So why don't we just enable our own gold currency? Why don't we enable a bottom-up return to sound money? Why don't we allow people to have their own personal gold standard? And that's what I thought. I think I can do this. I think I can work this out. And the delusional way of any entrepreneur.
Hey, Jason,
Yeah.
do you mind rewinding back like 20 seconds? I think we cut out here for a bit.
Okay.
So back to why don't we value gold as money anymore? Just 20 seconds back.
Yeah. You mean before, just when I said, why don't we enable gold as money?
Hello?
Oh, sorry. Yeah. Did you hear that? You didn't hear that?
And up again. Oh, let me.
So I just thought, well, why don't we enable gold as money? It's something that's immutable. It can't be changed. And so I thought, why can't we just use gold as money in electronic payments, in real-time electronic payments? And, in the kind of usual way that you get with an entrepreneur, the delusional self-belief that could be done. With my technical background, I've spent many years now trying to work out how to do it, and we've done it, and we're now live in the UK and the US, and we're now enabling a digital. Well, we're now enabled gold as money in electronic payments through the Glint app and MasterCard. So yeah, it's been a long journey, but now everybody has the opportunity to put themselves onto their own personal gold standard. and using the Glint app and MasterCard. You can now take this card, and once you've bought some gold on your app, you can spend it anywhere in the world. MasterCard's accepted. So it's different to, holding gold bars and coins, which of course everybody should do. That's for kind of one thing. This is kind of a complementary solution to be able to participate in this electronic system that we live in, but still be able to have sound money backing it.
Yeah, very interesting. I believe you also have a special offer for Capital Cosm viewers as well. Do you want to go ahead and share that with the audience too?
Yeah, sure. So look, if anybody signs up now, today or tomorrow, if they type in COSM, COSM, during registration, when they ask for a referral code or a promo code, please type that in because it's difficult to add it in afterwards, or impossible actually. Maybe you have my client services team could do that for you, but to save them the trouble, type it in during the registration process, and your viewers would be able to get the debit card, this debit card delivered to them free. So that'll save $10. And I've got to say as well, we'll be putting our pricing up in about, a couple of months' time. So it's obviously a very good time to buy gold on Glint. It's only 0.5% when you buy gold at the moment.
Yeah, fantastic news here, Jason. Let's go ahead and dive right into the gold price action. However, at the time of this recording here on February 10th, gold is shooting up higher, making new all-time highs. Although that's become kind of a cliche lately with gold making new all-time highs. It's kind of like, when is it not making new all-time highs? But interestingly enough, it's not getting any notoriety from the press. And I find that very peculiar, given that a lot of these governments are stockpiling gold. Maybe they don't want the common people to compete with them in the purchasing of gold. What do you make of this current rise in the gold price? Is it precipitated from the central banks? Is it precipitated from, wealthy billionaires and people with influence and power? And have we run too far? Are we due for a little bit of a pullback based on your insights and analysis? What do you see going on out there?
Well, of course, again, I'm sure you appreciate this as well, that, really what we're talking about is the value of the dollar going down. And we've been talking about this really all year now, maybe for 2 years. Well, I've been talking about it since I started Glint, but, we've seen this kind of demise of the US dollar as a store of value now for really accelerating over the last 2 years. You saw that movement and discussion about what was happening with the Brics nations. But of course, this big movement for central banks across the planet, especially, just everywhere, buying gold. And that's driven a lot of this as the uncertainty around, the purchasing power of the dollar increases. Then people are turning to the only reliable store of value, actually the only real money, because as we all know, JP Morgan said, gold is money, everything else is debt. And so in this kind of uncertainty that we're facing, really, in the world's rocked by tariffs and conflict and, Trump's bold trade moves to wars in Ukraine and the Middle East, Glint's doing its job. Sorry, gold is doing its job. It's everything. It's a mirror to all the problems that are going on with the monetary system and the global financial system. I think everybody's running for they're running for certainty. They're running from reliability in a time of global disruption. The only if you think about that, gold is money, everything else is debt. Mm-hmm. Yes, the fiat currency is debt. Even the stock market is fueled by that debt. That's the hose pipe of money that's been pumped into the stock markets and created these massive all-time highs, what many are calling a bubble. How can you when there are a world full of sanctions as well? How can anyone even rely on the US dollar? So, you never really know. Gold often surprises you, but it's definitely telling us something, isn't it? And I think that people are just moving towards that reliability that it offers. It's up 43% in the last 12 months. I think 2024 saw a 30% increase in its value, or should we say 30% decrease in the dollar's value. We've seen now up to 43%. It's touching that nearly $3,000 an ounce today. I think it's got up to 2,995 or something like that. I'm sure there will be corrections as games are played in the markets by the big bullion banks, etc. But generally speaking, as I keep saying, it's always a good time to buy gold, in my view, even though you can expect, the price of gold to go down, or should I say, the confidence in the dollar to temporarily go up. But it's always a good time because it's not just about the price; it's about reliability. I don't think gold can go to zero because, it's still going to be there. Even if you drop a nuclear bomb on it, it's going to go very flat, very thin layer of it, but it's still going to be there. I don't think you can say that about anything else, really. So, yeah, it's about reliability.
It's very fascinating what we're seeing going on over there with the LBMA. Have you been keeping up with the news out of the LBMA?
Well, it's not
struggling
it's not just the news.
Yeah,
I mean, it's not just we supply. Glint supplies, a very big institution with its gold, and on a monthly basis. In fact, a couple of times a month, we're supplying this institution's reserves with its gold. And normally there's no problem. It's a very deep and liquid market, and you're providing these great big James Bond gold bars, which are now over $1 million each of value in there. And it's normally pretty straightforward. But for the last 2 weeks, I mean, it kind of bubbled up a few weeks ago. But certainly last week and this week, it's been really, really difficult. In fact, last week, we could not buy investment grade gold bullion bars. We could not buy them in the US without paying a $54 premium.
Wow.
Now, just to put this into perspective, the premium's normally about $1.50, $2. The last time this happened was during COVID, when they couldn't ship gold between London and New York, and the prices blew out to, I think, the premiums blew out to about $70 an ounce. And so basically everyone in America is hoarding that gold, not letting it go. And so the result was, being able to get it from London. And we managed to get some from London. But of course, then everyone's realized there's an arbitrage between London and America. So everybody wanted to buy it from London. And all the big bullion banks went in and try and hoover as much of it up as possible. And they can't get enough of it out of the vaults, which is why you've seen stories about the Bank of England, even queues of people trying to get their gold out, because it's a logistical product, it's physical. It doesn't really affect the electronic marketplace because the ownership might still normally is moving between one player and another, even if it's in the same vault. But at the moment, the reason why this is happening, why the importance of getting hold of the physical metal, is because people are worried about Trump putting tariffs, for instance, could be on gold imported into the country. And so everybody wants it into the country before that happens, because I think that's very bullish for gold if he did do that. I mean, obviously supply. And if tariffs are imposed on gold going into the United States, then I think the price, certainly the premiums, would go through the roof. Yeah.
And certainly, if you really think about it, a revalued gold price to a much higher level does stand to benefit the U.S. balance sheet. That
funny that it certainly does. Who knows? I mean, there's lots of theories about that out there, but yeah, it does. It benefits anybody who's holding gold.
And you take that into account, and you take into account what Bassett said the other week about how their main objective at the Treasury is to temper down the 10-year yield, because the short-term yield, which is controlled by the Fed funds rate, hasn't really been doing the job. They've been cutting rates for the last year or so, and it's actually continued to increase the 10-year yield. Now, if you're able to revalue gold to a higher level, and the balance sheet now all of a sudden looks much better, does that spell good news if they're trying to lower the 10-year? If the balance sheet's looking a lot better now, does that not bring the 10-year down?
Yeah, I mean, I think this is the interesting thing about what's been happening for the last 2 years. The fact that these longer dated bonds have been struggling, and speaking to somebody who's a lot closer to this than I am, they were saying, look, it's getting to the point where you could actually see an auction fail, and that's really dangerous for the US, because if that was to happen, then effectively it means no one wants to buy the debt of this hugely indebted country. What is it now? It's unbelievable. It's going up. It's going up trillions every 6 months or something. And so if a bond market if an auction was to fail, that means you can't service the debt. You can't even pay the interest on this debt. So what's going to happen is that the central bank, the Fed, is going to have to step in and do huge quantitative easing. And we all know where that ends, massive inflation. And so, it could be, 15% inflation for a long time, because suddenly, it's not just products from tariffs, imports costing a lot more, but of course, businesses now having to deal with that huge interest rate, and that's going to be passed on to consumers. And I was thinking maybe that's the plan. Maybe that's the only way to get out of this, to just inflate your way out of this problem. But sure, I mean, the idea that the gold reserves, and of course we don't really know how much gold is in Fort Knox, but you've got to think there's a lot. That could definitely that could also be a different strategy, just drive the gold price up.
It's kind of similar to what they did in Weimar Republic. Weimar Republic, obviously, they had this big hyperinflationary episode. We have our share of inflation, but it's not hyperinflationary quite yet. But nonetheless, their market never crashed. Stock market kept going up and up and up. But the interesting thing is their currency lost value even faster. So in nominal terms, their stock market, their asset prices went up. But when you measure it in real terms, the market was actually down. And what held its value was gold. Gold was able to capture the pace of inflation. And when you look at all of these cycles in the past, it seems like it always kicks off with the big asset bubble. Assets always rise, and then gold. And then at the end, commodities and silver close out the show. So with all that said, does it not, I mean, where are we in this gold bull run? Because we are in a gold bull run. It's like you said, we were up 40 some odd % over the last year or so. What inning do you think we're in?
Well, I mean, there's such an interesting environment that we're in. I mean, we're in a situation which it's never happened before, that when the US dollar and interest rates are up, that gold is also going up. That has never happened before. It doesn't normally happen. Mm-hmm. I don't think it might have ever happened before. So yeah, more often than not, gold should be going down when the US dollar rates are going up. So gold is telling us something. What's it telling us? Well, I think that the issues are really serious, and really, the systemic problems within the financial system, monetary system, are huge. For that type of thing to happen, for instance, if interest rates were to come down, then that would put even more rocket fuel, you'd think, behind the gold price. Right. With the level of disruption as well. I mean, Trump's got these very disruptive tactics, and I think that's a valid negotiating technique with the world. You want to negotiate. You don't want to split the difference, because if I want to get some, if something's on price for $100 and I offer 50, and then we say, should we split the difference? I end up paying 75. Trump's tactics is to say it's $100. You're crazy. I've only got $10, and immediately he pulls it right the way back down. And that's personally how I look at it. I think we should buy Greenland, or take Greenland. I'd be surprised if that's what he really wanted. I think it's a great negotiating technique, though. Suddenly, what does he really want? Is it a base in Greenland? Is it rare earth metals from Greenland? I don't know. But I think he's obviously been a very tough negotiator through his business life, and I think he's applying that to the world. But when you're the president of the United States of America, with the power and weight of the United States of America and its military industrial complex behind you, that is a very disruptive technique. And I don't think that's going to be going away for very long. So you've got a situation where they've started QE again. You can see it in the stats. You've got the situation where they're struggling to bring interest rates down on the long end of the curve. You've got the situation where the disruption is just being amplified by this, administration and its techniques. You've got global military destruction, trade wars, and battlefield tensions not going away. I mean, come on. I mean, when was the last time we had all of this going on with gold? And a lot of people have looked at what gold did in the 70s and things like that. And what people thought was the big gold run was just the beginning. But again, I personally, I don't look at it around through the lens of kind of value and gain, because I know that gold, well, I've seen it for thousands of years. Gold has retained its value. And there might be ups and downs short term when confidence in fiat currency goes up for some reason. But I kind of feel very confident it's going to retain its value. For me, it's money. It's not a speculative get rich quick. It's not that type of thing. There's no CEOs running this company called gold. It can't get better. It can't get worse. It's just gold. It's normally just stuck in a vault. It's really boring. It's really just a really great ledger of what we owe each other. And for me, it is therefore money. And that's an important thing for me, that I maintain my purchasing power and I don't feel it can just go to zero like I think a stock could, or a fiat currency could, or even a cryptocurrency could. For me, gold is that store of value. And if I'm working hard, which I really am, and I want my hard-earned money to go somewhere where it is safe. So yeah, for me, definitely something that I'm wanting to buy, and I think a lot of our clients do, and most of the world is. Look at what they're doing. I mean, they wouldn't carry on buying it, and it's not just the central banks, but they wouldn't be just carrying on buying it if they thought it was going to tank next week.
Yeah, and there's a certain word for this effect, this phenomenon. I believe it's called the Lindy effect, which states that the longer something's been in existence, the longer something's been around, the chance that it stays in existence, that it stays around. So gold being millennia old, many millennia old, increases its chances that it sticks around, because clearly there's functionality. By that same token, government has also been around for quite a while. So I wouldn't bet too much on an anarcho-capitalist government, as much as we, people like you and I and libertarians might want something like that. But nonetheless, if gold has been around for all of these millennia, certainly there's something. And when you look at countries like Russia and China and these Brics nations, and all throughout last year, there was this talk about building out this settlement currency, perhaps based off of gold, or 40% backing of gold, or some basket of commodities. They've kind of pushed that back a bit, given Trump's recent comments of tariffing the Brics nations by the tune of 100%. Should they continue down the settlement currency route. Russia even came out and said that, denied the entire thing was even happening. They said, "Oh, about seeking a settlement currency backed by gold." How do you view the Brics nations? Do you think they're still trying to create this currency, commodity backed, gold backed?
My view is that it's going to be difficult for them to do that. I've always thought this. A bunch of nations that are very different cultures, very different economies, and hoping that they'll all get on and be able to develop some kind of settlement currency and system is, I think, asking a lot. For Russia to get on with China, for China to get on with India, and so on. I mean, on top of that, you've then got the technical challenges around that too. And for all the problems with the dollar, I think that yes, it's completely lost its place as a store of value. But as a medium of exchange, the whole planet system is still running on dollars, and right. I don't see that going around anytime soon. But these countries are moving to a gold standard because they are buying more gold than they've ever bought, and the second most important reserve asset they own is gold after the dollar. So I think they are, they're putting where their money where they believe it needs to be, and that is in gold. And I think that's enough. That's enough for me. And so people are doing deals with gold, physical gold. It's happening, and I just think a system for that is just going to take a little bit longer to bed in. Maybe they'll come and knocking on Glint's door. We've already had We've already had a small central bank come knock on our door and ask us
Wow.
to launch in their country. And actually, this is stuff happening right on the doorstep, right here in the US. I mean, phenomenal what is happening with constitutional gold currency. Never in my life did I think, especially even when I set up Glint, that US states at the last count 23 would be looking to enable their constitutional right to use gold as money, transactional gold as money. And, there are people that have been on the committees, the work groups for this, some of them including Randy Corrals, the former vice chairman of the Federal Reserve, saying, well, why not? Why shouldn't people be able to save in gold and save in whatever they want and be able to spend it in dollars, for instance? That's their view, I think, of the world. And I think it's very encouraging. So we're certainly trying to help legislators around the state be able to understand how easy this would be. Glint's effectively been doing what they want to happen for the last 5 years across the United States. Anybody can download a Glint app in America and get a card sent to them with their code.
Cosm. You mentioned this to me while we were off camera. You're talking about all of these developments going on stateside about constitutional gold money. I've talked about this a number of times with my good friend Rob. I want to get your perspective on this. Where do you see this going? Does this really have legs? Could we really start seeing a gold standard on state by state basis in the US?
Yeah, for sure. I mean, Jimmy Petronas has come out, and you should read his press release. He's just been blessed by President Trump, to take on a senator role for Florida. He's going to not be the financial controller for long, I don't think. But he's coming out pretty bullish, saying this is why I'm doing this. This is what we're doing here in Florida, and we're studying it at the moment. Those bills are going to be coming out, I think, over the next couple of weeks. This is senior leadership support. This isn't just not just. I mean, the state representatives play an amazing role in the state's apparatus. It's incredible at what they do, especially because they generally don't get paid for it, and they have to hold down a normal job. But that grassroots movement across the United States has been happening for the last couple of years, and it's quite incredible to see that progress. I think you can go to transactionalgold.com. It's a website run by a team in Texas, actually, that are trying to keep track of it. And things are changing so quickly, they can't keep track. But effectively, I know at my last count, 23 US states, there's legislation either has been passed to do with this, is being written, or is even being voted on. Utah, last year, they passed legislation to enable the state to be able to buy gold for its reserves, because it's crazy that the central bank can buy gold. All individuals in their state can buy gold, but the treasurer couldn't. That was mad. So they've enabled the treasurer to do that. And then on top of that, they got involved in studying what would be involved in a transactional gold platform and what would be involved in how they could develop the whole gold economy in their state. And that's all happened. They've published a report. They're recommending transactional gold platforms and a whole bunch of other stuff. And that's literally, there's a bill that went through, I think, the House committee just last week, and it had a bipartisan, unanimous vote. It went through, it sailed through. So I'm like, wow, I don't think that's ever happened before, because the Democrats believe this is a matter of, economic stability for everyday people. The Republicans also believe the same thing, and lots of others. And so it's reaching, this legislation is reaching across both sides of the aisle. Everyone's getting behind it. And now you've also, I think everyone's feeling very bullish about change, because President Trump is definitely about change. And they're getting excited about what Bitcoin can do, et cetera, and cryptocurrencies. But of course, cryptocurrency can never be a currency. What is incredible about the initiatives at the state level, and I've mentioned Utah, I've mentioned Florida, there's also Texas, who already got an early start with this, with building their own depository a few years ago. There's Louisiana, there's Kansas. I mean, everywhere. It's everywhere. 23 states. And what's amazing is the US Constitution, Article 1, Section 10, Clause 1 of the US Constitution says that US states are forbidden to make their own currency unless it is gold. It goes like something along the lines of no state may make anything a payment in of debts except gold and silver. And if you're a sound money advocate, if you believe in sound money, if you're upset about the fiat currency, what it's done to your savings, what the inflation, how it's eroding your life away and your business, and no matter how hard you work and you feel like you're in a kind of a current going in the opposite direction, whilst you look over there and you see people on the yachts, having a great time, the have-nots versus the have-yachts. That was a great phrase by one of the US legislators I heard the other day. If you feel anything like that, you should be ringing up and finding out if your legislator is behind this or not. Does he know about it? Is he going to be voting for it? Because they need to know. They will vote for something if they believe their constituents are being upset if they don't. They'll vote for it if they know you're going to get your vote. So you should be. This is your once in 100-year opportunity to actually vote sound money in, and it's got so many benefits to it. It's unbelievable. I mean, the IRS. I think most attorney generals at different states, I think, feel very confident that the IRS would have to let capital gains tax on such a system fall away, because, of course, that's another unjust tax. I mean, totally immoral tax to tax you just because you wanted to maintain your purchasing power. Just, that's immoral. And a lot of the people I talk to, quote all the time, things like unequal weights and measures are like an anathema to the Lord. Like, this is for centuries, for millennia, been an aberration. And here, of course, it's been happening every day since 1971, And the opportunity is now in your hands. Like, Danny, you should do it. You should find out who your local state legislator is. You should email them and say, are you behind this? Because this is one of the biggest, best opportunities we've ever had to have economic justice in our state. This is it. And I tell you, if you don't get it done now, I don't know when it's going to come around again. And you don't want to be in a situation when, if things all go upside down, that you don't have this. We need this in place now. We don't need it in place. We don't need to have to set it all up when things are going badly, because between now and the day it all goes badly, which I hope it never happens, because I have kids. I don't want them to have to go through that disruption, but I'm afraid there's a high chance it will. And even if this disruption isn't cataclysmic, we've just got this really insidious erosion of our purchasing power all the time. It's too late to set something up, once it's all going wrong. And you need to do it now, and we need to get behind it.
Yeah, and you need to do it now when you're a sane and rational mind, as opposed to when you're in crisis mode and things are happening on an emotional state. So,
yeah, I mean, people. I bet you, there's probably a big part of your audience, are collecting gold bars and coins, and it's absolutely a good idea. Yeah. But this is the chance to create a legitimate sound money in the state that's complementary and runs alongside the dollar.
Yeah, and the capital gains tax on precious metals really is theft, if nothing else. Here's an example, just for you guys to illustrate what Jason here is talking about. Suppose you bought $10,000 worth of gold in 2010. And then fast forward in 2020 or 2025, the price of gold is nearly double. Now, if your $10,000 worth of gold back then now equates to $20,000. Now, if the IRS wants to come in and capital gains tax that thing, that's 100% gain that you're gonna pay what, 30, 40% of that. So now you're actually losing money by buying gold, because now your $10,000 worth of gold is worth $16,000, but in real terms, it should be worth $20,000. So you're coming out at a loss. This is why capital gains, the elimination of capital gains, especially from the precious metals front, needs to be front and center.
Yeah,
otherwise
and look,
you can't
I always say to people, if you're fortunate to have a capital a gain in the value of your gold, you have more often than not, you're going to have to pay capital gains tax.
Yeah.
And long do I hope that gets abolished through this type of legislation. But just FYI, with the Glint app, it was something we knew we needed to address pretty quickly. And so there's a capital gains tax report that you can generate. You can just go in, press a button, and it calculates what your gains are. So you don't have to work it out yourself. You can download the spreadsheet yourself as well and try and work it out, but we've made it easy. So you can just send it to KPMG. It automatically goes to KPMG. They get anonymous data, so they don't know who you are. They just see a bunch of transactions, and they're able to then calculate the capital gains tax and send that report back to you for your to give to the tax man. But yeah, it's a great opportunity to get rid of this. And then you'll have two amazing systems. You've got gold cars, coins, and bars. We've got Glint, for instance, enabling you to be able to participate in electronic payments with that. I mean, I literally, with this, I mean, I've paid for things at 34. I've paid for my Wi-Fi on American Airlines at 34,000 feet in the sky. And I've paid for my electric bike I hired this morning in London. I paid with gold, and I've paid for chicken tenders in Texas, and with gold. Anywhere in the world, Mastercard's accepted. And that's a great additional utility to your gold. And then we go to the next level with the state getting behind it, and then suddenly no capital gains tax as well. I mean, amazing.
It's a 1-2 punch. What else do you want? Well, hey, Jason, it's been a pleasure having you on. Anything else you want to talk about before you wrap up here?
No, I mean, we've covered quite a few things. Plenty more to talk about, I'm sure, over the coming months. But I just thanks for listening. It's been a great opportunity to talk to you. And as I said, if anybody wants to learn a little bit about Glint, for instance, they can just go to our website, glintpay.com. But actually, if you just want to go to your app store, like, the Apple Store or Google Store, you can download Glint. It just takes a few seconds. And then, of course, it just takes a few minutes to register. And if you type in COSM, C-O-S-M, then we'll get you a free card sent to you without any cost. That'll save $10. So that's a little gift from us. Thank you, Danny, for inviting me on the show. And I think it's going to be fascinating over the next few weeks what happens in the whole world, markets, geopolitical, and obviously see how gold reacts. It tends to know more about what's going to happen than we do.
Oh, the next few hours, let alone the next few weeks. I mean, with the way things are going now, again, new all-time highs pretty much every day on the gold front. And then that's not even taking into account everything else that's happening around gold. So exciting times to be around. We'll definitely have you back on again, Jason. Thank you so much for coming on. If you enjoyed this broadcast, give us a like and subscribe to the channel so you don't miss an episode. Right, go Jason, go in the comments section so you don't miss. If you agreed with what Jason had to say, and if you disagreed with anything, however, do leave me a comment. I do read the comments. So really interested to get your take here, guys. And then finally, check us out on our Substack, capitalcosm.substack.com, where you can get early access and ad-free versions of all of my videos, including uncensored versions for the videos that warranted. So with all that said, I'll catch you guys in the next episode. Jason, thanks for coming on, my friend. I'll see you next time.
Thanks, Danny.